All right, folks. The closing hour live stream. If you're with us, let me know in the comments. If you can hear me fine, you can see the picture fine. Let's begin. Welcome from YouTube, Patreon, wherever you are. Okay, let's go. The story of the day, of course, Apple, because calculators, come on, man, that's better than AI. So you got Apple here with the upgrade, and few minutes into the action, it became obvious to me that something bigger is going on here than just, oh, we have a rebound. And if you go to the daily chart, once you get to the top of the bearish engulfing candle that we got yesterday, 197.30, it just becomes clear that, okay, we got a squeeze going on here, and the volume just keeps going and keeps going. If you look at the 5 minutes chart, a huge buy order came out here, so this is pre-market, probably got executed in the first 5 minutes or so. You can see it here, the first 15 minutes, the order is executed. And then after that comes the slew, and I'll show you here. If you just go to the most important premiums and turn off the sell side, because the sell side, everybody's going to sell covered calls today, of course, that's the obvious. But when you look at the buy side, then increase the minimum a little bit for significant trades, let's say 400,000 or so. And you'll see that a lot of them are called, especially in the morning. Most of them came out calls. Few here and there, and now I'm seeing some neutral trades here, strangles. Some folks are playing straddles with $2 million, so with expectations that there's a move one way or the other coming out. But here, this is the most significant bearish trade, I would say, 202, 220. So they're still giving the Apple a little bit of room to go. 205, of course, this is important for September 20th. But the rest are all calls, even to the 35. So this is going to squeeze the market maker out of the blue, and this is what we see today. And Apple, of course, with the huge weighting, that's going to keep the S&P and the Qs floating higher. Do we enter now? Do you take a shot on it? It's really tempting, but again, when you have these kind of squeezes, they last all the way to the options expiration. I'm not saying it's going to go higher again, but it's not going to pull back significantly, absent of a macro catalyst, a big one from the CPI or the FOMC. But besides that, since we got squeezed, the market maker is probably going to keep it afloat all the way till Friday. We're probably going to hover above 200. So maybe it's not the best re-entry here until you see a little more. I'll go with the 200 just as a lot of 200 puts for next week at this point, but there's no guarantee that you're going to get a decent pullback this week since we have options expiration and the squeeze already happened. Just keep that in mind. So there are better trades out there, and we got caught in a bad one here, at least I did. Being fixated on it that, oh, I'm going to buy a put right now to fix the losing one could be a bad recipe here. So use that information, make your own decisions. But let's look at the market here. What happened? The dollar is still giving us this signal that it wants to go bullish, but it is struggling with the 50. And it's sort of showing a topping candle here. So yesterday we were talking about the logic saying that CPI comes out tame, dollar goes down. But the dollar been going higher and trading higher. Now we see sort of topping candles here. Maybe that finally the dollar is looking for a softer CPI, and it might turn down tomorrow. So that could be a good sign for gold, silver for tomorrow, but I wouldn't play lottos on them because it's not as decisive as this guy right here. When the auction came out and pre-CPI, we see a bearish engulfing candle erasing any possibility of a bull flag. I'd rather go with the yield plays rather than dollar plays. That means no metals, but we're going to go with home builders, real estate, that kind of stuff. So if you look at, suppose we get a tame CPI. And before we do that, folks, let's go to the VIX. We talked about 1324 closing above. That would have been a bullish signal for the VIX. Never really happened throughout the day, not even from an hourly standpoint. So we got resistance here, resistance here. Yeah, we can argue maybe higher low and tomorrow we go higher, but that's going to depend on the CPI and the FOMC. I would say closing above 1324. The chart told us repeatedly that if you close above it, it is important. It means that the VIX is going higher. So we'll keep that in mind for tomorrow. But for now, if you look at the lottos that I just put out on Discord, it looks to me that the XHB could be a good play for a tame CPI lotto because it's showing this hammerish candle. It retested the lows here. See how many times it's been going back and forth and retesting these lows, and it's been holding these lows. So we have to assume that if there's a lower CPI and yields go down tomorrow, the XHB could make it and close this gap right here. That'll be 102.80. So if you take the 103, even 103 and a half, that'll be okay as a play. But you're probably going to close it tomorrow if you get to the gap and then stall. The other one, I mean, you can do the IYR, but it's a little more expensive. I looked at the options, a little more expensive than the rest. But the IYR will also make sense. The KRE got sold, and now finding some footing, so makes a good candidate for a pop tomorrow if the CPI comes out tame. Those are the ones I'm going to stick with. Now, what if the CPI comes out ugly, though? You can bet that the KRE will go down, sure, but better plays. I think the IWM, since it's showing a little bit of weakness here, the IWM could be a candidate for another drop if the CPI comes out hot, but it is at the lower bands. The option's a little more expensive, so I'd rather go with the TLT, folks. The TLT, if we clean up the chart a little bit here, it is facing the top of this candle as resistance. And if we see the CPI coming out a little hotter tomorrow with a surprise, then I think the TLT will at least trim some of these gains and head toward 91, so the 91 strike for the puts will be good. And again, you don't want to spend too much, folks. 80 cents, 60 cents, a buck at most. Anything that costs you more than that, it's more of a serious trade. Okay, so that's the pre-CPI setup. Now we see some of the stuff that we talked about yesterday. Although, folks, look, are there warning signs? Yes, there are some. I mean, the XLF is not supposed to be acting this way if you're expecting that yields are going to go down. And of course, we have these formations of head and shoulder across all of the yield-sensitive sector. You've seen it with the IYR. You've seen it with the XBI. Now we see it with the XLF. And if the XLF goes down, that's the second largest sector in the S&P. So there are warning signs. But until we get the CPI and the FOMC out of the way, we're not going to know how it's going to play out. Once we get the CPI and the FOMC out of the way, if we see a break in these head and shoulder patterns, then yeah, we'll have plenty of put trades against these yield-sensitive names, XLF, KRE, IYR, all of them. But for now, we got to hold our horses. Okay, I don't want to go on and on, folks, because I know you got some questions and comments, so let's go right to it here. Thoughts on Oracle and Cassie. We have earnings today from Oracle. That's going to be important, but what do you do with this name? You can argue for a double top. I can just give you the technical pattern, by the way. Fundamentals, that's a different story. But the technical patterns right now, it suggests that we have a double top and holding the 20, though. So it's not giving you a clear sign one way or the other. Let's do some Oracle here, see what they're buying. Nothing going on here big, but Oracle, expiration, let's do 6 days. A lot of bearish stuff going on here. 120, lots of 120. So that's what they're buying. 120 is just underneath the 20 moving average. So let's price that in and see if it's worth it or not. Because if it's too expensive, then what is the point? If we do Oracle and we go with the 14th, either it plays in the 14th or it doesn't. 275, that's steep. And if we look at the implied volatility, if we just look at 124, that's about 4% movement, and then calls about 4%. So the market maker is pricing in 4 to 5% move in Oracle. But to me, my friend, this is too expensive. Yeah, if you don't have any prior knowledge of how the report is going to come out, it's too expensive for a speculative bet. So if I have to choose a trade, it'll be the 120 because folks are doing it, but it's too expensive. Now, if we look at Cassie, this one, from a technical standpoint, if you look at it from the daily chart, so you had a bullish trend of higher lows, right? And now you're forming sort of a lower low, and maybe the topping head and shoulder, and you break down. So it's not a bullish formation for the chart. If you look at the weekly, also losing some momentum. So we would go with the puts, but let's see what they're doing because usually they have insider information here, and stuff before it happens. We got the 330 calls, so that's a bit to the upside. 30K, 310. You have only the 330 calls sell, so you don't have any buy to the downside. You have the only buy comes at the 330. Let's say you want to go with that and bet that Cassie will go higher. 330 for the 21st cost you 800. Wow, yeah, that's too much. That's too much. I would say look for post earnings, because Oracle usually is a really good post earnings play. Clean up the chart. Look at the daily here, and you'll see that usually has it moves after the initial move, and you see better trades here. So there was a place for us to take a trade once we have a confirmation in the MACD at the topping candle that we go down. Here you see that you got a bottoming candle. It didn't move after the earnings report, but we've seen confirmations, the MACD confirmations here, and the stock rallied. So I'd rather go with a post play rather than a pre-market play with the premiums looking like this. Okay, Leo, did Apple spend all their buyback money after the AI event to make it look better? Well, when you have buybacks, I mean, that's going to pump it just because of expectations, because folks will say, well, Apple has the money to pump the stock. There's a floor. But I think it's the analysts who came out today, and more of them will come out tomorrow, I promise you. Now that the stock broke into all-time highs, they're going to stampede because all of them got negative ratings on Apple, at least a lot of them. When we've seen this drop here, they began downgrading Apple right here. Now that the stock is up, they're going to come out of the woodwork and start upgrading Apple. And probably that's going to be a bad sign. But for now, it's doing the magic. But you'll see also criticism coming out, folks. You'll see a lot of folks saying, I don't know if I'm going to buy the phone just because of these AI features. They're cool. They're nice to have, but am I going to spend another $1,500 for all of these features? I don't know about that. So it's going to cook a little bit. But for today, it's a mechanical event, and you got to trust it. And I don't think we can fight it until we see a sign of weakness tomorrow, or at least some flows. So go to the option strat here. Go to your live flow and type in Apple. Look at the buy side. And you got to see some significant number of puts showing up. And right now, it's just predominantly a one-way street. You have a handful of put trade. Some of them are big, but you need to see more. And once you see that, we'll talk about Apple again. Purple Nerd, all good. Thank you so much, Chuck. Thank you for joining. Jerome, thank you for joining. Leo, Rogan McGills, howdy. Thank you so much, William. Thanks for the option strat guide video. Oh, we'll do even more. So you see what I just said here with the live flow. How can you watch the live flow? And you'll see that once you see a big put options trade like the 3 and 15 million when it showed up here, the stock ticks down because there's feedback feeding the market maker and the tape. So we'll do a bigger video about option strat and how we can use it. Okay. Michael, we're not quiet. We're here. Trying not to disturb the algos. I took a shot and shot myself. Well, that happens, my friend. I mean, that Apple trade, go back to the template that we talked about. Could you fill a template, right, with the thesis, technical thesis, where you stop, where you do it? Could you do it yesterday? Yes. We could have done that for a bearish trade. For a bullish trade, you couldn't have done a lot in the template. So this is one of the instances when you get in and they smack you right in the face in the most aggressive way. There's nothing we can do. You walk up with the trade already losing 2/3 of its value. So there's very little for us to do. Okay. Hey, Mav, what do you think about silver outperforming gold being an indicator that there is risk on sentiment in the market? So SLV today is actually down. Okay, so you look at the GLD, it's outperforming silver. So at least for today, gold is outperforming silver. I wouldn't put too much into it. I think that the market is being clear. Look at the VIX. Right? If there was fear in the market about the CPI, we would have seen the VIX above 13.24. So it is saying risk on. The action, the way that they sold the VIX today is saying risk on. The way that they sold or they bought bonds and dropped the yields, it is saying risk on. So for now, that's the element of surprise is the CPI, core CPI. That's where the surprise could come from. That all core CPI because of insurance or medical cost or Housing went higher. That could be the knife that could stab them in the back. But for now, look at energy prices month on month. The consensus says the CPI is going to come tame. We're going to begin talking about rate cuts. I heard one of the managers today say the CPI will give us a pump in the morning, and then Jerome Powell will drop us down. Well, why would that happen? They think that Jerome Powell will pour cold water on the cuts, even though the CPI will come out collaborative. I don't know if I can trust that or not, because Jerome Powell been pumping the rate cuts since last December. But that's what a lot of folks are thinking. If we look at the SPY, folks, let's clean up this one a little bit. Closing above the gap at the highs again, so this is going to be a bullish closing, folks. You went down, found support, closed the gap, you closed above the gap, you're probably forming a bull flag pattern, so there's nothing right now pointing out to a bearish outcome tomorrow from the CPI. Okay, CPI, hot or not? What's your educated guess? I would say that it will come out tame just because of energy. We're at the 11th right now, so we can't look at the monthly, but it'll give us approximately. If we look at performance, let's go month, and you'll see that the gasoline RBOB down about 3%. You'll see that Brent down about 1% or so. This is, again, not the most accurate, but the bottom line is energy pricing went down, and that's going to help the CPI look better month on month at least. Core CPI could be a surprise. And again, folks could jerk off to the CPI tomorrow, then the PPI comes out hot. I mean, there are so many twists and turns this week. Kamesh, hey, Mav, need your point of view on Oracle earnings. What do you think is going to happen? Look, technically it could go either way because from a technical standpoint, it's above the 20, but it also has a double top forming at 127.24. So from a technical point, it can't really do anything. Now, fundamentally, we got Salesforce and the guidance was down. We got a lot of software names and the guidance was down. Could Oracle be different or follow the same theme that we've seen with software? Look, you got to make a decision here. If you're going to take a shot before the report comes out, understand that there's a huge degree of speculation and you're paying a lot for that speculation based on the premiums. Me, I'm not seeing anything strong here that tells me I should go into a trade for Oracle. I'll do a post earnings instead. But it's up to you. Now, what about Tesla? Tesla's kind of, it is breaking a little bit, but it's not decisive yet because you got here. The close of this candle, you can look at the open or the close since it is a doji indecision, then came the decision after that. So 168.29, the open was 168.85. Let's just take a rough estimate in between. Where did you go? Here it is. And just go with the 168.5. And we'll look at that as a perimeter. 168.50. There we go. I think if we break that, we start to trend down, then okay, we have the gap right here. A lot of folks are beginning to buy the 130, really aggressive against Tesla. And I don't know if this stance by Elon Musk against Apple will help him or not. It might actually turn investors against Tesla. They buy Apple and they dump Tesla. Although I think that he's right. He's spot on. With the spying thing, he's absolutely spot on. But anyways, for now, I think that there's a lot of risk with trading Tesla because if you look at the weekly chart, which is more important, when you have consolidation like this in the daily and you can't make up your mind, look at the big picture. Anything decisive here? No, you have still got bullish momentum going on. You can argue that maybe this is the beginning of a bear flag and we go down, sure. But you have to go back to the daily and give yourself at least a parameter. That if we lose 168.5 from daily basis, then I can go with a put options trade. Okay, Ryan, thank you so much. Appreciate you being here. Nick, Roblox, what do we do with Roblox? The trade that we have for July is holding pretty good. It's not losing a lot of value, even though Roblox is up a tick today. The risk, of course, is if it does that bull flag. So if we identify a cut loss, when do you know for sure this is a bull flag? Look at the top of the wick here. The formation, you have a formation, assume this is the flag. What is the top wick of this formation? Here's the top wick. 36.12, we take that. And if we trade above it, whoops, here we go. If we trade above it, then yes, it's playing out differently and we don't have a trade anymore. But for now, we'll keep it as it is. Theoretically, from David Farmer, theoretically, hot CPI results in oil energy negative impact. Yes, because usually when we have a hot CPI, it means that the Fed is not going to cut rates, maybe tighten rates. At least was in the past, and that's not good for oil. Oil loves rate cuts. Historically, oil loves rate cuts. Do you think there will be a major movement tomorrow, generally based on the CPI, or is it all priced in? You got the SLB calls 45 with down 19%, but what is the strike here? Let's see. The 45 expiration date 21st. 45. Okay, so I'm not going to look at the CPI as the catalyst that could fix the trade. I think right now you're consolidating in a bullish manner. We talked about this half of the body of the candle always important, 45.11. And we're finding a little bit of a hard time. Despite the fact that the futures today are tame, SLB is still holding. Look, you're not too far. And I understand why you're fearful about this, because of let's say oil moves in a big way because of the CPI. Any drop from here, like a big breakdown candle, the trade will be toast. So I understand why you're nervous about it, but with this look, it'd be a shame to say close it, get scared, get out of it, and next thing you know, we get a break. You test it, and then we get a break, and you see SLB trading at 46. Now the trade is profitable. So, and if you hedge against it, you're spending more money, that's going to make your profitability target even further away. So it's a decision you need to make. If you're nervous about it, you take the loss. If this was my trade, I would not. I think that, again, if the consensus is a tame CPI, then energy would love it. And if we look at UK oil, for example, Brent, doji candle above the 20. If you look at US oil, that's WTI, it's doing the same thing, keeping the 20 moving average. If you look at crude oil futures, so we're looking at the futures themselves doing the same thing, holding the 20 with a bullish pattern. So I'd keep it. Based on all of this information that we discussed, I'll keep SLB. That's the risk I'd take. How much do you think the SPY can move up or down the CPI? JP Morgan always give us the estimates, and they say that it's going to be between half a percentage point to 2%. We never got 2%, at least not recently. We get the half a percentage point to down 1.5. It wouldn't really matter to me, to be honest with you, because even if you get the CPI, it moves the SPY one way or the other. Let's assume it's up. That's the base assumption that I think all of us are heading into the CPI based upon. Suppose we go up. Can we guarantee what the FOMC is going to say? Because we're going to go up based on rate cuts. If Powell says, okay, no, we're not going to do rate cuts right now, we need to see a few more months worth of data, market might get upset because of that comment. And then we have the PPI. So I wouldn't be too fixated on what the SPY is going to do up or down. If you have a trade on it, you're making a bet before the CPI, and that's flipping a coin. So assess your risk. If you're involved in the CPI and the SPY with the trade, assess your risk. You're supposed to keep it, or maybe wait till the CPI is out of the way. Fire water. Do you think this market will pull back tomorrow? Blast higher? Look, I don't know about blast higher. I think that the CPI, the consensus is we go higher, half a percentage point, a percentage point, and then we'll see what happens after that from the FOMC. Apple up today after that down day yesterday. It's confusing. But could it go higher tomorrow? Apple, if you look at the 1 hour chart, that's the parameter that we use for the short-term trading. Right now, it's way overbought. But like I said, when you have options, and the majority of the pump today came from a gamma squeeze. Somebody bought and caused the initial pop because of the analyst upgrade. And then came immediately. I was watching the live flow, and it just immediately piling in, buying the 200, the 205 calls. They went deep into buying these calls. And it caused the gamma squeeze because the market maker was anticipating the same thing, that we're going to go down. And they didn't expect that we're going to have any buy that would threaten 200 to be in the money, or even 195 to be in the money. So the market maker got caught by surprise, and they had to buy, and push the shares higher. Usually, again, as you see it with earnings, when you have a gamma squeeze after earnings, it lasts all the way to the options expiration. Then the market maker begins to change the formation. So that's how I would look at it. Now, is it confusing? When you talk about confusing, yesterday we've seen sell the news. But today the analyst came out after digesting the event, and they said that this is going to be a game changer. This is going to cause sales to accelerate. I think that's why we're seeing folks now stamping to buy Apple. And again, folks, when you have a break to all-time highs, the algorithms will buy, the analysts will come out of the woodwork. So I'm thinking about it. I thought about buying the 200 or 205, 200 and betting on a pullback, but I think when I review that kind of thinking, it's just me being fixated because I ate a shit bag from the trade that I got here, and I just want to get back at it. That's emotional. That's wrong kind of thinking. I'd rather take the money and then find another chart that could give me a better trade rather than getting stuck with this guy here. Okay. Mav, will a decent report in the Fed speech help spike oil and oil services stocks? I know that's stupid. So not stupid. Why is it stupid? But there should be some connection. Yes, it is. There is connection. If the CPI comes out tame and Jerome Powell actually talks about rate cuts, yeah, oil futures are going to blast higher. And that's the consensus right now. Erica, I'm back on the UNG. Keep or buy more options. So if we look at the Henry Hub, because that's what the UNG really tracks. I said today that we're going to finish, I think we finished the target here, that we have 3.185 basis points. We're really close. And then we're going to get into the dangerous territory where it becomes overbought, and we've seen before here, overbought, and we've seen a reaction of consolidation. We've seen overbought here, and it was a big sell-off. So we're hoping that it's not going to be a big sell-off once we get there. We're just going to consolidate a little bit more and then break to another target, probably going to be in or around here. And I think that will be the case because there's a supply issue for natural gas right now. It's beginning to show up. Europe is running a little low, and now we're beginning to see demand for the Henry Hub. So I would stick with the UNG, but just understand that you're going to face that resistance here, and it might cause a pullback. So what you want to see is a break above these targets. In the UNG, it's 2161. If you close above it, then I think comfortably we can say that, okay, this is, again, huge cup and handle. We broke above the handle, and higher we go. But I think, if just my 2 cents, based on the technical overbought here in the RSI, I think we're going to consolidate a little bit, if not pull back a little more before we do a move higher. So time is important. Maybe the opening right now, not the best open until you get the confirmation of a close above. Okay, what do we have here? We have Jeff. Did you hear about the Saudis letting the petrodollar agreement with the U.S. expire? That's always talk. What are they going to use? The yuan? That's not reliable right now. I think the Saudis would talk like this once in a while just because they want a security pact agreement with the United States. I think the Biden administration is getting closer to that if they could do the deal with Israel. So Saudi is still very tied to the U.S. and the dollar. They would be out of their minds if they do it. So I wouldn't worry about it right now. Stefan plays, Jeff, hey Mav, do you see any short trade on CrowdStrike? See, this guy been also getting squeezed for a while. And when you have these squeezes, they last, folks. They stick around, and they keep building on it. No reversal sign yet. I mean, yesterday you got semi-reversal, but today you're back at the top of that candle. So it tells me that not time yet. It's not the time yet. Watch it. If you want to bet to the upside, think they could go a little crazier here. You can do that play because the candle today supports that. But as far as the reversal play, we're not there yet. Reversal play, by the way, you want to see something like this. When you see a huge reversal candle with a huge volume, you can follow in that for a few more days. Here, that's the reversal candle here as the outside of the upper Bollinger Bands, and you see downside coming after that. Here, we're not seeing anything. It's just an overextended chart. That's all there is. Compassion. Hey, Mav, what would be a good entry point for CCJ on the pullback? This is Cameco. Could it just be a beginning of a larger pullback? This is a really good question. Again, uranium will be sensitive to what happens tomorrow. Uranium dropped today, and we see a break below the 20, so that's not good. We faced resistance of 55.85, but again, you look at the weekly chart, that's what really matters here. And so far, we're not seeing major damage. If we lose the 20 weeks moving average, okay, then we got a problem. And uranium prices, again, will be sensitive to what happens tomorrow. Read the dollar. Understand that because of the recent move in the dollar, few days here worth of upside, uranium went down. But if we see the dollar coming back down tomorrow, then uranium will go higher. We'll see a recovery in CCJ. It's highly sensitive to the dollar. Now, projection for Occidental and SLB. Worth calls, maybe out in July. I'm sitting on the 21st right now, but feel like cutting it close because they've been a little stagnant. All of them been stagnant. And you have redundancy here. Pick one, either SLB or Occidental. I mean, you see that the momentum is about to shift, right? But timing is really important here in the entry. It's up to you. Just pick one of those. I would say that Occidental, it's just a matter of time before we see bullish momentum showing up in the daily chart. SLB already hammered, bruised, and now it's just facing that little resistance at the half of the body of the candle. So just pick one of those. Whatever is the cheapest, whatever you like in this formation, just pick one. Once you get a confirmation and we see another upside day tomorrow for crude, then begin to expand and buy more oil exposure. But for now, we're just going to stick to one. Yeah, the petrodollar, folks. The issue of the petrodollar is it's going to happen at some point. Okay, at some point, all of these oil countries will realize that we don't want to depend on the U.S. anymore, and they'll do something. A unified currency by BRICS, where they trade oil based on that currency. That's going to happen, but it depends on Saudi. Saudi has to do it, and Saudi right now highly dependent on the U.S. for security, and they're not going to jeopardize that. They'll talk about it. They'll try to motivate the U.S. administration to be closer by threatening, but they're not going to do it, at least not right now. Zanskar, sorry, Apple again, prematurely entered the 205 puts today. 621 and 200 puts for 628. 45% loss. Do you see a chance of break even at the next pullback? I mean, you're not far. Okay, you get a pullback, you'll be able to break even. The 21 is a little, 21, you got it pretty good for this 205. What would be the cut loss timing? The cut loss, I mean, there is no cut loss here because you're at already all-time highs. The stack is already trading at the highs, so you can't really identify a cut loss. It comes to timing. You need to see something happening in a timely manner. For example, if you look at the option strat here, you go long put. Let's suppose we buy Apple puts right now, and we think that's going to be a good entry for the 21st. We go with the 200. Costs about $112. Well, by the end of this week, comes Thursday, Friday, we need to see something happening, and that something would be the trade going down to, let's say, 203 and a half for the trade to be profitable into next week. I would actually say 202. We have to go down about 2%, trim some of those gains. The cut loss becomes also based on time, and that means that what is the acceptable loss here for you? Tomorrow, what is an acceptable loss? Do you think the trade is going against your way? I would say the 207 and a half, and then tomorrow it'll probably be lower, right? So not tomorrow, Thursday, excuse me. And then it gets lower and lower and lower because decay begins to kick in. So you have to look at this and decide what your cut loss time-wise, what has to happen, what should not happen by a time period. And again, I would say 203. We have to get that by tomorrow into the end of the week for the 200 to be profitable for next week. Now, you got it for the 28th, so you got a little more time. Just study this table right here. And I think that for this trade, for the 200 for the 28th, you need to see by the end of the week at 204, so down about 1%. You need to see down 1% by the end of the week. Then there's a chance that the trade could be profitable. Okay. Gold, so we have Datadog here. Let's talk about this. Datadog 115 puts at 621 and you 20% down. 621. You have the 115. So that's in the money already. That's in the money, but probably the entry was here, right? And you got caught in this big candle. Now, what do we see with this guy? The top of the breakdown candle, that's going to be important. So 115.18. You trade above it, you gotta close it because it means that's going to head for the next destination. They'll be closing the gap right here. So for now, since you're not really that far, you're actually in the money. I'd keep it, and if I see something like this, for example, a stall here, and a stall here, and the chart begins to go down, taking the lows of today's candle and the close of yesterday's candle, that would tell me that we're going to head down. I would actually average down on it to make the trade profitable. So I'll keep it for now. It's not a bad trade. Gold, silver. From your recent comment, it appears that we should wait a bit for entry. What would you recommend, the share purchase or an option play? So if you look at the spot price of gold, it is still showing this bearish pattern, and that's really suspicious because gold usually spot on things. When gold rallies, I mean, here it gives you a false, it gave us a false signal here. Okay, granted, but most of the time, gold is a really good indicator. And now, right now, it's showing a bearish signal. So, honestly, I would not really buy gold until we see a break out of this range that we've been stuck in. So the highs here have to be broken before I say that if you're entering gold, that would be the best entry because all of this energy from the consolidation will be released. And you can see it better in the weekly chart. So once you take the highs, clean it up, I think that it'll be safe to buy gold because we'll see another run like this, another energy release like this we've seen since, let's say, February of this year. But right now, if you enter and you have bearish momentum going on and risk of the dollar, because the dollar is still showing signs of strength. Again, I don't know why the managers are thinking that way. They think that Powell somehow wants the market to go down. And I disagree. I've never seen anything from Powell that he wants the market down. But now they say, oh, he's afraid that the action, the stock market could keep inflation higher. Now he's realizing that the wealth impact is important, and he's going to try to hammer it down tomorrow. We'll see if that kind of talk is right or not, but if he pumps the dollar higher, gold will come back down. So the entry right now is not the best. Okay, Mav, great weekend video. Thanks. You mentioned stocks today that are equivalent to Comcast in 2000. Not Comcast, Compact in 2000. What is it? That's Supermicro. Supermicro. It's the same thing. Hey, Mav, what are your thoughts on Starbucks? I have the 80 puts July 5th with a weekly hedge. Currently up 80%. Congratulations. And see potential for more downside. Let's look at Starbucks. Is it finally playing out for us? Is it finally, right? Remember the bear flag that we talked about? So there is a sign that it could be playing out, but we have to zoom into the daily. Hourly, just so we can see that topping in his shoulder. It's not really the best topping in his shoulder, to be honest with you. But we've broken below 81, which is the half of the breakdown candle on the weekly. So this gap down. And now you have the bear flag. You say that you got a hedge. I got to go with more downside tomorrow just because of this bear flag that's playing out. Let's look at the flow here. See if somebody's buying puts on Starbucks and could help you out with the trade playing out. Yeah, they're buying a lot of puts here. Let's do the sell side. Yeah, they're buying 81, 92. These are big block trades too. Look at this. 92 and a half. That's in the money now. 105, 81. So yeah, you got support. Look, when I see this kind of stuff, there are a few calls here coming probably from the same trader at 26, but that's 2 years from now. I think when I see this kind of stuff, I want to stick with the trade here, that it could play even more. And if it does tomorrow, if you get a nice leg down out of it, then consider opening a spread. And the hedge should be taken off the table because you're not going to need it anymore. Your hedge becomes, instead of the upside play, it becomes opening a spread down here. Okay. EWZ looking like a good potential entry price for the long term. Appreciate your perspective, John. Appreciate you being here. The EWZ. In the long term, the EWZ depends on the dollar going down. Okay, so the EWZ, if you look at, oversold right now because the dollar went higher in the last few days. But it depends on the dollar going down because it's heavy in commodities. It's heavy in oil, in metals, in coffee. So you need to see the dollar going down. I think that the EWZ, believe it or not, will be a good, really good pick. Not right now, but when the U.S. market goes down. When the Fed begins easing to rescue the market and pumping commodities, I think the EWZ will be a really good pick. But right now, if you want to trade it, this is really oversold. So you can trade just an oversold rebound for now. Okay, JPM, do you see another upside after tomorrow with today's pops? JPM been looking strong, and I mean, right now because of the XLF, I would say that let's wait for the CPI because the XLF is showing this negative pattern. XLF is heavily influenced by JPM, the heaviest weighting. Got tapping in his shoulder, so I would not buy JPM today. If it climbs above 195.43, because you see this range right here, we've broken that range. So technically, this is a bearish signal. But since we have a macro catalyst coming out tomorrow, we don't want to follow it because it could be a trap. Tomorrow, if we go back above, and we trade above 195.43, okay, then I'd say with yields going down, JP Morgan will do better. But for now, just leave it as it is. If we get another downside tomorrow, downside day tomorrow, then we'll have plenty of downside to come in this name. This could be looked at as a bear flag that's playing out, and we'll have some support here in this consolidation. We'll probably go down to below 190. So we got to trade on it, but we have to wait for the macro event to get out of the way, just to avoid being in a trap. Hello, Maverick on AMC. I'm trying to do a synthetic covered call or poor man's covered call. Gotcha. I purchased the 3.5 calls expiration date September and sold the $6 call for June 21st. So you bought the 3.5 calls in the money for AMC and you sold the 6. This is not a bad trade. You sold the 6, and if you go to 6, you're probably going to exit the position. But yeah, this is not a bad trade. 3.5, you got it in the money, and then you sold the $6. That's pretty good for June 21st. Now, the only thing I would say, identify a cut loss, right? So if it goes down again, what is the cut loss? And I would say if you fill the gap and you trade below the gap, and the gap here, let's say the close is 433. So if we take that out, matter of fact, if you go below 5, the trade is probably going to be under threat that it might go down and reach the lows. But for now, it's a good strategy. I see what you're doing here, and I think that you stick with it until you get the cut loss or you hit the $6, and then the objective is done. It's interesting that AMC is up. GME is beginning to show some signs of life here. Let's see, up about 20% today. So yeah, I want you to stick with that because AMC could move along if we have GameStop moving higher again. Last thoughts here. Yeah, the calls up 50% and the sell calls down 70%. That's okay. That's fine. Yeah, that's how it's supposed to play. The one that you sold will be down, and if we get a pump again tomorrow, it'll probably be down even more. But closing above 6 by the expiration date, I don't see it happening. So I don't think you're at risk here because these things pump and then they dump again. And again, if it pumps again, AMC, we're looking at GME here, but if it pumps again, AMC, you can up the strike. You can sell even something more. If you still got some of your calls and you haven't sold anything on them, you can sell even more at a higher strike. Let's take a look, folks, at the end here on the SPY, see if we have anything major, anything notable. The hourly chart, nothing is going on here. Let's clean up a little bit of this myths that we have. Right now, I mean, the whole formation looks like a bull flag, right? The whole thing here looks like a bull flag, waiting to go higher tomorrow. And I would actually look at the E-mini futures. They'll be more accurate. And right now, no risk of the head and shoulder anymore since we closed above the number that we gave you yesterday. So no risk of the head and shoulder. But if you look at the 4 hours, believe it or not, it's still stuck in a range. Didn't do anything notable yet. But it did close at the highs. And that's going to cause algorithmic buying. And if we see that the CPI comes out tame, I think we see more and more buying. So the risk is predominantly to the upside. If we look at the VIX, one more look here, continues to sell into the close, so that's a no-go. 1324, no-go for today. On the hourly, can we see the lower high reversal? That depends on tomorrow's macro data, and if it does, folks, I'll be the first to tell you, okay, the market is going to go down, and the VIX is heading higher. But until we hit that, the assumption is higher we go. Dollar, any last minute move here, still strong, but I think that it's showing signs of stopping here. Yields, that's finished for the day. We got the bearish engulfing, so that's helpful to the market. XHB, really quickly, I think that's could be a really good trade for tomorrow. KRE, that could be a really good trade for tomorrow too. Apple, anything here? Nope, they're stampeding into the close. What is it, up 7% now? 7%. 7% out of a $3 trillion. Over $250 billion created today because of the calculator. Amazing stuff. NVIDIA. Let's not forget about NVIDIA, folks. NVIDIA, anything here on NVIDIA, we have to look at the hourly because they messed up the charts for us. Nothing to see here. Nothing, honestly, for us to do here. AMD is the one that you guys have been talking about, that it could go down further, and that's the only one that's showing weakness, although it's a little oversold. So if I had to bet, I would bet on a rebound for AMD tomorrow. The daily, though, I think it goes down further because the weekly, you'll see more signs of weakness. Here's cleaned it up a little bit. We can argue that AMD has sort of a topping in its shoulder, bear flaggish, playing out. It'll reach, I think, this kind of support right here at the 125, 130-ish. But that's the weekly chart. It's going to take time. The most immediate will be, for me, a rebound play based on the hourly chart. Rebound, then we go down after a failure. Bitcoin. I don't want to forget about Bitcoin because big move today. But look at the daily chart, folks. Did we see any damage? So we got the bear flag playing out. But do we have significant damage by closing below 67,000? No. So sign of weakness today, but it's not decisive yet. Tesla, anything moving here at the end? Not really. It's actually moving a little higher. No closing below 162, 68.5, so nothing for us to do here. Snowflake. Thank you, Ryan. Snowflake 621, 140 calls at 90% loss. Yeah, but we it's 90. It's too hard to come back. But you got Oracle that it might help Snowflake coming back a little bit. As far as 140 for 621, it's a long shot. It's going to require now to get a move, let's say 8% or so, 9%. Could it happen? Yes, but the chances, I would say, maybe like 5% it would happen. So your goal right now would be just to get out with a smaller loss. You can do that by averaging down. If Oracle comes out okay tomorrow, you can average down and get out. But again, the problem with that is if you average down, you might be digging yourself deeper if it continues to go down. So sometimes when you have a trade that goes against you in a bad way, and you're down 70, 80, 90%, sometimes you just have to let it go and find another profitable trade. And I think this could be one of those where you have to structure a new trade for Snowflake. If you begin to see it going up after oversold conditions, and I agree it's really oversold, but if it begins to move higher, shows signs of life, trading above this range right here, let's say 133.59, the lows of this candle, and the top of many of these candles that we've seen here. If we trade above that number, then okay. I would say buy some calls, and as these calls play out, they'll fix your losing trade. They'll compensate you at least for some of the loss. When do we short Eli Lilly? Not right now. This is going to happen when the consumer gets weaker. Because right now it's Ozempic and it's a subscription. It's even better than iPhone. It's $1,500 a month, and you have to pay it. You have to continue to stay on the drug. I mean, it's better than cocaine, really. It's a subscription that you keep paying for and you can't let go of. So yeah, that stock is strong, will continue to be strong until the consumer gets weaker, and then they don't care about their weight anymore because they can't afford it. So that's going to be one of the last to go. Pizza, Firewater. Pizza's not moving. And either you abandon the trade, which it doesn't have a lot, but I don't know. I'm seeing some signs of life here. It just has to happen in a timely manner. So you got the saucer bottoming thing going on. We just need to move a little higher the next few days, and it's just being stubborn here, not catching any buy. But the analysts, when they look at the charts like this, finding some support at the bottom, you might look back tomorrow and you see somebody here giving an upgrade or that's oversold, and that's what we're betting on right now. We need some analysts to come out with an upgrade. What are they saying today? Papa John's brings back cheesy burger pizza this summer, giving the internet exactly what it wants. Okay, that's good news. Cheesy burger pizza. What do you want to have a heart attack here? But anyways, since the internet loves it, yeah, we want to stick with it a little more. I have two NDX puts, 18,800 and 18,900. A loss of 70%. Yeah, I wouldn't hold it. See, I was against this move from the get-go. And now with a break in Apple and NVIDIA could move at any moment, I think you got a double whammy against you here. I'd cut. Not right now. This is not the time. Let's look at some of my list here, see what's moving, folks. Anything worthy of note? Paramount down, Donald Trump down, Southwest gave all of the gains from yesterday. Wow. Next arrow, that's utilities. Let's see if it's impacting the utilities here a little bit. But that's interesting that next arrow is down. PayPal getting hit by Apple again. Dennis, that's a good short. You know, if you short, because I'm shorting this name. If you want to short, this guy's going for bankruptcy really soon. And I got to shorten this guy too. Play, who I think is going to go in bankruptcy too. But anyways, let's go back to the list here. Disney down, Tesla down. GameStop coming back up. What happened here? Roaring Kitty, let's see. Roaring Kitty, something happened. That's my assumption. Affirm moving a little higher. Apple, Elf. There's nothing really that I find sexy here. CrowdStrike could be the momentum trade that we just talked about that continues to go higher. ARM is the same thing. It's momentum trade. A lot of you want to short ARM. Just give it a little more time. Let them finish. I don't know what they're looking at. Maybe 150 and then we reach a ceiling here. Donut beginning to move. Finally getting some upgrades. Options activities also showing bullishness. So Donut could be a wild card here for comeback. GM topping candle, right? We'll see. Tomorrow, if give us a confirmation that it is a topping candle, we'll take a short on it because this is juicy. When you see a candle like this comes back with a confirmation, then it's probably a top. Palo Alto, pizza, we just talked about that. Yeah, it's a weird market today. Here's the map for you before we finish up here, folks. Most of the market is down, but you got Apple up about 7%. That's keeping the indices higher. Go figure. Anyhow, folks, we're just going to keep it as it is here, and we'll begin doing the show for you this evening. Let's take more questions. Something happened. Yusuf, I love hearing your insights about the car market, by the way. The car market is recovering. I swear it feels like tax season today. Everything was selling like hotcakes. That's interesting. I guess the only thing that comes to mind is Carvana, if that's the case. Carvana could be breaking to the upside. CarMax could be a recovery, but I wonder why. Why is that happening? Did we give stimulus or something? What happened here? FSLR, Firewater says FSLR, ANF, those are also in short squeezes or gamma squeezes. Remember you guys asked me about it here? Do we short FSLR? I said, no, this is a squeeze. They keep squeezing and the volume is still hot. There's more where that came from. So this is a one that you want to actually chase a little more. ANF, it's the same thing. The volume is still hot, which tells me that we're not through with the gamma and short covering here. Gamma squeeze and short covering. I would actually take a trade to the upside with the upper Bollinger Bands, the 200, as a wild shot. But yeah, not time yet to short these guys. GoDaddy, a lot of you want to short GoDaddy. I mean, look at this guy. Just keeps going. It got included in the S&P now. All right, folks, we're just going to wrap it up right here, but we're going to be back with a daily show. We'll begin working on it in a little bit here, half an hour or so. And we'll discuss all of what happened today and more trends. We'll do a little bit more trend analysis for the CPI. And we'll do the cars, see if that's, when you say that cars are coming back, that could be inflationary for used cars. They may be the wild card that comes out and push the core CPI higher. So we'll look at it. Anyhow, thank you so much, folks, for joining, and we'll talk to you soon. Take care.